We still own some Nvidia, and we own, different things. We own DRAM stocks.
You sold some Nvidia?
Well, we sold a lot of our Nvidia.
Stuff before, yeah.
But, listen, the stock we thought was, too high at the time and would come down. Unfortunately, we didn't buy it when it came back down.
Right.
But, so it's okay. It's really, those stocks like Nvidia is a question. Do you have enough power, okay, for the growth? Do you have the next generation models that can take their chip? So it looks great in 24. It looks great in 25. I have no idea in 26 and 27. I am no idea. Okay, I mean, if I was good, I don't believe my analysts. I don't believe any analysts. I don't trust myself. You know what I'm saying? I just don't know how you know. There's too much. And you have these multiples out there and how it can go, and the variation of where that earnings can be on the out years is too much. So it's not my preferred vehicle versus other things that I have more confidence in how I can, how we can do in my shop, analysis on the earnings.
In a stunning twist that has the stock market buzzing, Apple Inc. has abruptly decided to withdraw from its high-profile negotiations to invest in OpenAI's latest funding round. The funding round, spearheaded by Thrive Capital, is geared to raise an astonishing $6.5 billion to $7 billion. But hold on to your seats. This isn't just another routine funding effort. With tech giants Microsoft Corporation and Nvidia Corporation still in the game, this move by Apple has ignited a flurry of speculation and intrigue. Could this be a pivotal moment in the tech world, or just another blip on the radar? Stay tuned, as this development unfolds with layers of complexity and far-reaching implications. This event has triggered a series of questions and debates among industry experts, investors, and tech enthusiasts alike. Hello everyone, and welcome back to Investocracy.
A macro technical perspective, it is all about rates, and I guess secondarily maybe about Nvidia. Nvidia has a triangle formation on its chart that it should be testing the upper boundary of it today with Micron's news. So we have a real proof point for Nvidia. The triangles tend to give way to increased volatility. They just don't give you an idea of which direction that's going to come in. So if we see Nvidia break out to the upside from its triangle formation, that is something that would be market positive. And of course, conversely, if we see a breakdown, that would be market negative.
Hard to avoid mentioning Nvidia on a day like this. And I say it because after the Micron numbers, Morgan Stanley's commentary about Micron, they're a bit cautious on Micron's valuation, but they essentially say it's a read-through for Nvidia. Because if Micron's commentary about the total market size for the high bandwidth memory products are plausible, then you'd look at effectively Nvidia's cost of goods sold and what it means for their demand. So essentially all they're saying is, yeah, nice for Micron, but what it means is the bull case for Nvidia is probably reinforced by it. And you see the stock, it's up again another couple of percent, 2.75%. 130 for Nvidia is the August high. So it's sort of trying to fight its way back and kind of change this little downtrend that's been in place since June, obviously having a huge impact on the NASDAQ 100 as well.
Let's dive into the meat and potatoes of this captivating story. Picture this. Apple's last-minute decision to bail on the OpenAI investment round is akin to a star athlete backing out of a championship game just moments before kickoff. Thrive Capital, the venture capital firm orchestrating the round, is set to close the deal next week, and the world waits with bated breath to see who will emerge triumphant. Microsoft's involvement has been especially noteworthy. The software behemoth is rumored to chip in around $1 billion, adding to its already colossal $13 billion stake in OpenAI. Talk about putting your money where your mouth is. Meanwhile, Nvidia is also deeply entrenched in discussions, indicating a strong interest in aligning with the AI powerhouse. The competitive stakes in the AI sector are higher than ever, with each move reverberating throughout the tech industry. So, why did Apple decide to step away from the negotiating table? The reasons are murky, but one plausible explanation could be the complicated transition that OpenAI is currently undergoing. Initially founded as a non-profit, OpenAI is now in the throes of transforming into a for-profit entity, a maneuver that, as you can imagine, is akin to turning a battleship on a dime. If this transition isn't consummated within 2 years, investors in this funding round will have the option to seek refunds. Sounds like a high-stakes poker game, doesn't it? This transition has not been without its hurdles, contributing to a wider dialogue about the sustainability and ethical implications of such a move. Now, here's a zinger for you. Elon Musk, the ever-opinionated entrepreneur behind Tesla and SpaceX, has not been shy about his reservations regarding OpenAI's transition. In fact, he's openly questioned the legality of this shift, calling it into scrutiny. As if that weren't enough drama, Musk also took issue with Apple's previous partnership with OpenAI, specifically aimed at integrating ChatGPT into its operating systems. Privacy concerns were cited, with Musk even going as far as to threaten to ban Apple products from all his ventures, including Tesla. Talk about throwing down the gauntlet. Musk's criticisms add another layer of complexity to the narrative, highlighting the intersecting concerns of ethics, legality, and business strategy. But before we go any further, if you want to keep up with the latest tech market updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. Now, back to the video.
You actually believe that tech can move another 10% in Q4. What's the catalyst?
I mean, look, this is our second trip in Asia in the last 6 weeks. Demand's outstripping supply 15 to 1. So even though right now it starts with Godfather of AI, Jensen, NVIDIA, this second, third, fourth derivative, it's just starting to play out in terms of AI. I think that is going to be the catalyst to tech stocks being up 10% plus this year, 20% next year. I think the AI party, still 9 p.m. with a party that doesn't end until 4 a.m.
Why does the party end at 4 a.m.? I mean, I don't even, this metaphor always cracks me up every time you do it. But on a serious note, you're saying demand is up. That's what's going to push the tech sector 10% more in Q4. Demand exactly for what? For chatbots, for chips? I mean, what is the real catalyst here?
I mean, if I look from a chip demand, 15 to 1 demand to supply. So if you see how it's all playing out, enterprises are lining up in terms of the AI revolution. Now we're just going to start to see the software, the use cases. That's where massive AI, Palantir, front and center. You look at names like Oracle, what I believe Salesforce.com, ServiceNow. So now that tidal wave of spend, $1 trillion of AI CapEx is coming to the shores of tech, but to me, in the next 2 to 3 years.
Despite all these quagmires, the momentum behind OpenAI's funding round remains strong. Other big names like Tiger Global Management and UAE-backed MGX are also considering entering the fray. This type of multi-billion-dollar round isn't just a monumental financial endeavor, it's a bellwether for where technology and innovation might be heading. Artificial intelligence represents a frontier where the potential for growth and disruptive innovations is virtually limitless. This funding round could very well serve as a defining moment for the AI industry, shaping its trajectory and setting new benchmarks for success. Think about it. The data backing this situation is compelling. According to a report from PitchBook, investments in AI companies have skyrocketed by 26% this year alone. Microsoft's LinkedIn engagement around AI grew by 45% after its initial investment in OpenAI, showing that investor interest isn't just limited to dollar bills. It's about capturing a zeitgeist. Nvidia's shares, on the other hand, saw a 12% spike following their announcement of potential participation in the round, effectively putting to rest any doubts about market enthusiasm. The financial community watches intently, eager to see if OpenAI can match the lofty expectations set by these injections of capital. This data underscores the broad-based enthusiasm and high stakes involved in the evolving AI landscape. Apple's withdrawal doesn't just leave a financial gap, but also opens up a dialogue on their strategic intentions within the AI sector. Could this signify a shift in Apple's internal priorities? Or perhaps a move to develop their AI capabilities in-house, away from the prying eyes of the public markets? It's also worth considering Apple's history of stringent privacy policies and secure ecosystems, factors that might have contributed to their decision. Additionally, the competitive landscape in AI is fierce, and Apple may be channeling its resources to enhance Siri and other in-house projects to better compete against the ubiquitous presence of Google Assistant and Amazon Alexa. Only time will tell, but one thing is sure. These developments have firmly placed AI investments under the microscope, with both opportunities and challenges coming into sharp focus. This moment could indeed be a critical juncture for Apple and its future endeavors in AI technology. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
By the way, I interviewed Alex Karp a few weeks ago. We talked about you. We talked about you and some of your notes. He's a fan. He's a fan. I want to get to some more of your note. According to your note, for every dollar spent on NVIDIA chips, there's an $8 to $10 spend in the tech sector. So I want to drill down on that. Is it in the tech sector or is it on AI capabilities? Because we just talked about utilities having their best quarter, since back in 2003. Isn't a lot of this spending on just physical infrastructure? Is that technically tech spending?
Sure. I think 8 to 10 is going to be from software, infrastructure. You talk about the energy piece. It speaks to our view that it's not just about NVIDIA. It's not just about Microsoft. It's now about the multiplier. So what you're going to see really across software, I think the big catalyst going to tech over the next 12, 18 months, numbers are going to go up, I think, 15, 20% across the tech sector. And I think that's why a lot of the bears that are continue being those caves and hibernation modes, they come out talking about valuation. I think Street's underestimating growth. That's why, in my opinion, this tech bull market still in the second inning.
I got to be fair, though, Dan. You are one of the biggest bulls when it comes to tech overall. So you're always optimistic, in all fairness.
But let's just talk about scale. Me and you have talked for many years. There have been times where maybe there was some caution, where you could see some risk. But right now, in terms of just fundamentally what we see it across the board, not just in Asia, but around the world. Enterprises are lining up, and I think that's why it's about the next phases now of tech playing out in terms of this AI revolution.
So, what does this all mean for you, the savvy investor? The landscape of artificial intelligence is rapidly evolving, and the stakes are higher than ever. OpenAI, despite its controversies, remains a cornerstone of this revolutionary sector. With giants like Microsoft and Nvidia showing unwavering support, the ship seems to be steering in a promising direction. Now could be an ideal time to get in on the action, especially with Nvidia shares gaining momentum and Microsoft's steadfast involvement indicating a bullish outlook. At present, OpenAI's funding round is highly anticipated to close successfully, spelling enormous potential growth for associated stocks. Analysts have forecast significant gains, with Nvidia's stock potentially achieving a 20% increase over the next 6 months due to its AI advancements. Meanwhile, Microsoft's investment validates its long-term vision, making it a stalwart choice for those playing the long game. The implications of this round extend beyond immediate valuations. They may well shape the competitive dynamics of the AI industry for years to come. What's your take on Apple bowing out at the 11th hour? How do you see the future of AI investments unfolding? We'd love to hear your thoughts in the comments below. Stay tuned for more updates and, as always, happy investing. And finally, if you would like to know what companies like Nvidia, Microsoft, Apple, or even OpenAI have been up to these past few days, go ahead and click on the next video on your screen. See you there.